What on earth is going on with silver? And is triple digit silver still on the cards? I'm joined in this episode of GoldCore TV by Patrick Karim of North Star Bad Charts. And we're discussing everything technical analysis about our favorite white metal. And remember, if you want to see more interviews with thought leaders and industry experts in financial markets, subscribe to GoldCore TV and hit the notification bell now. And if you want to learn how to buy, sell, and store precious metals, gold, and silver, log on to goldcore.com, your precious metals experts. Patrick, welcome to GoldCore TV.
Hello, Dave. I'm super happy and honored that you gave me a call there to be on your show.
Our pleasure. Now, I'm going to get straight into it. What on earth is going on with silver at the moment? We're having another seriously down day, and it seems to be silver dropping on its own. Gold is not really keeping pace with it to the downside. It's been under a lot of pressure lately. We failed to break to the upside and hold above 2550 area, and now we just seem to be in for another deep correction here. What's going on?
Well, most of my charts, they're long-term charts, macro cycles, but if there's always a possibility of going on the smaller time frames. So I have like a Stein-Weinstein setup where I'm going to go on the weekly chart and then see where you're in relationship to that 30-week moving average. So if you're above an inclining 30-week moving average, you're in a stage 2 uptrend. So for swing traders or position traders, like for 6 months, a little bit more, you know if the trend's going to help you. But silver in the past few weeks has actually started drifting lower below its 30-week moving average. So in stage analysis, that would be considered stage 3 top. And if we break below important support, a stage 4 decline. And you have these cycles within bigger time frames. So let's say on the monthly chart, quarterly chart, even if the uptrend is still up, if you zoom in, you're going to have, of course, it never goes in a straight line, right? So then you're going to have these cycles on the smaller time frames. And the silver seems to be starting or continuing a downtrend, going slower until it hits eventually some important support from those higher time frames.
And where are you seeing there? If you want to pull up a chart there, where are you seeing some of those important trend lines coming in and support areas in particular?
So first, I'm going to zoom out. I'm going to go on let's say the monthly chart. So here's just a silver chart. Here's like the uptrend we had in 2001, that nice bull market all the way to the GFC crash, and then it continued after. So you see silver, the way it behaves, it explodes, then it consolidates this, I don't know, for over a year. That's its 1-year moving average. So usually I could fine tune a moving average according to the behavior of a stock. So it has a tendency to dip below that 1-year moving average. Even here before blasting off, it did dip and close below that 1-year moving average. But that long-term macro tidal wave you could see it through a longer-term moving average, like the 3-year, and it's still.
So that dark line there is a 3-year moving average, yeah.
And it keeps, you're holding above, and the closer you get in, all those weak hands, like the consolidation's over, then you explode up. Everybody jumps in here. You're probably going to see me drawing rocket ships on my charts, screaming to the moon here. But like any other humans, that wasn't meant to be. Sideways move, false breakout. Here, even dip below, scary, but still above the 3-year moving average. So if I zoom into today, and this is like human TA, guys, it's human behavior, it's fractals. And you see these behaviors, these type of patterns happening over and over again. And if you're zoomed in, like on today on the daily chart, you think it's the end of the world. But right now you could just be hammering any of these candles, these red candles that were dipping below. And until the month is closed, if the buyers come in by the end of the month, by the end of July, this could just end up being a wick below that 1-year moving average, like any one of these. You see here, dip below. So during the month, that's a white candle. But during the month, it was actually red for a good portion of the month right here. So you don't know what you're going to do.
So we're coming towards the end of the month here. So we've got to really look at this monthly close. Close is quite key. Particularly, we're seeing the 1-year moving average come quite close on that line there. At the moment, it's below it at the moment, but there's still an opportunity for that to potentially close above it, is what you're saying.
It could, but when I'll go on the weekly chart to zoom in to see the chances of that happening, how much time we have before the end of the month. The moving average is starting to flatten out. So here's what I would call my monthly defined support. So this is probably going to be invisible. Sometimes it matches on the smaller time frames. So here's my monthly close right here in March. In March of 2021, I refuse to close below 27.39. So we're approaching that here. So let's say I go on my weekly chart. So you see how you're dipping below, above. Right now, we're approaching that monthly defined support.
Mm-hmm.
It looks super dire. We're below a declining 10-week moving average, 30-week moving average. This is a moment where we could have maybe a bounce here, but you can't until, hold on. Oh, I'm going to bring a drawing tool. Until it could even go like that here, because until you get back above those moving averages, you're in a danger zone right here.
Right.
Because right now those moving averages are going to become resistance, and they're going to want to pull you down.
And they're coming lower each time, obviously, as we progress at the moment.
So there's a fight right now. So the smaller time frames are breaking down. The daily probably looks worse. The weekly chart is putting downwards pressure, but you have that monthly chart where you have monthly defined support that is also pushing upwards. So they're both fighting one against another. And that's why we have these fights have been happening since we hit those highs. And eventually, if there's successive weekly bearish continuation, then that will translate into a bearish month, right? And then you'll have to look at the higher time frames, because you'll be fighting the higher time frames. I like going on the quarterly chart. And this is the quarterly chart. That's the 3-year moving average. So that's kind of an important long-term moving average. Then you'll be fighting this uptrend that's coming in. And we're kind of distant. So it's kind of normal that on the quarterly chart, we've been going sideways until we get closer to that. I could even click here. Here I have, this is a cool tool I have. It's the distance from the moving average. So how far am I from that 3-year 12 period times 3 months from that 3-year moving average? The more you are away, the more it's fear of missing out mode. Here, probably in January of 2011, to the moon, you get Peter Schiff, everybody saying like whatever, those super high targets. And every time you get super stretched, the chart needs to heal either in price or in time until you get close to that moving average. And if you base it on previous times, when you're in a bull market, it doesn't fully reset back to that 3-year moving average, right? It comes close, but there's so much bullish pressure that you can't really hit it too long before buyers say, okay, the price, it's too low. We're in a bull market.
We've got some value coming back into the market and we can buy here. And if we get too far away from that moving average, we have a tendency to get a bit vulnerable in the price.
Exactly. It's definitely that. And you'll notice like everybody's saying, you gotta buy silver. I'll be saying it. I'll have so many new followers on Twitter. And right now I'm pretty rock bottom in my new followers on Twitter. So I'm kind of, since I'm like type of a long-term bullish silver, it kind of gives you a clue that the sentiment is uber low. And a day like this is probably going to make it even worse. But when you take a step back, look at these candles right here, man. Your quarterly close, and the quarter is going to close in July, August, September, end of September. We'll see how this looks like. But if I put on the line chart, it's just consolidating sideways right now for the past since we topped. But that consolidation is letting that moving average catch up. And the more that moving average catches up, it creates a lower risk, higher reward opportunity. Because wherever you would buy, no matter how low it would dip here, that would be your low risk entry. And the target would be another parabolic run where you'd get stretched this far away from that 3-year moving average, where the fear of missing out starts piling up, silver squeeze, everybody talks about that, etc. And this is probably where you want to take profits. So now it's resetting naturally after a violent explosion, just like it did previously in the previous bull runs. Look, this is like the 1970s. Same type of thing, exploded, consolidated, exploded, consolidated, right close to that 3-year moving average before exploding again.
But still effectively remains in a bull market all throughout that time.
It did, because the bull market, it's defined by those longer periods, especially the secular, or however you want to define the bull market. You had a bullish cross here. You had a bullish 1 to 3 year bullish cross. I did a whole bunch of charts where you see the lines in the sand. Okay. Let me show you one of my recent charts.
There's a lot of variety in the charts that you publish.
Yeah, always trying to get different angles, trying to get different viewpoints.
Yeah.
But what I've noticed at the end of the day is you could try measuring it different ways, but bullish price action will generally generate bullish looking charts. Like even if somebody looks like this, I use the point and figure chart.
Point and figure charts are very interesting because they effectively, and correct me if I'm wrong here, they effectively take time out of the analysis and just look purely at the price movement.
Yeah, exactly, Dave. This is like, I like those point and figure charts. People have a difficult time understanding. They look at the time scale and say, Patrick, I don't understand. Are you saying the target's going to be, and then they say, Patrick, your data's wrong. There's gaps. But guy, this is super old school. Like, I don't know. This is old.
Yeah.
Only when the price reverses a certain amount on the downside, it adds a new column. So X's, the price action just fluctuated up and down within that column. And until you have sufficient price action, according to the settings, to have a drawdown, then it adds a new column. But that new column could be in 1 month, 1 year, 10 years, you could fluctuate. You see, this is the 1902, and this is 1980, the 1980 tops. All this time is consolidated in those 4 candles or those four rows.
4 columns, yeah.
And if there's a lot of fluctuation, then here, look, this is the 2020 highs. And there's been so much consolidation that we've generated up and down, up and down, up and down.
The Elon Musk defined takeoff line. Explain that one.
Oh, because I put a rocket ship and because of his SpaceX,
okay. Yeah.
I said, but that's me just like
having a bit of fun.
Yeah.
So that's a very interesting pattern that it's starting to form there now that you passed your 2020 line there. You're suggesting if we go through this Elon Musk defined takeoff line that we could be going significantly higher, and you've a $48 price target on there initially, yeah?
Yeah, so it's a vacuum. So the way these patterns they work, the bigger the base, all the bag holders that bought on the way up in 2011, 2012, they're not there anymore. Like they moved on to cryptos, they moved on to something else. And essentially once that resolution here, that consolidation evaporates, I call it a reverse symmetry move. Like you see on the way down here, even if like 1982 all the way to 2011, even if it's all these years, a lot of damage was created on the way up. And then you have this multi-decade base. And then on the way up, it's almost a perfect reverse symmetry move you have on the upside. So once you break out about that line, there's a reverse. You could probably have a reverse symmetry move to the edge of the
$48 level.
Yeah, to that 48 target. It's like a magnet line. It wants to get tested one more time. And there's another chart I did, Dave. It was whenever gold does a new high, silver has always done a new high. So for me, it's like a countdown. So since gold did its new high at over 2000 there last year, I see like a ticking time bomb. So silver, every time gold did a new high, okay, well, silver's going to get its turn eventually, right? Because whatever monetary imbalances gold sniffed out, it seeps through. So eventually that capital, it goes through silver. Guys, that's my narrative. So fundamental guys, don't shoot me. I shouldn't be talking narratives, but that's the way I see it. And usually it's within, I don't know, 9 months to 40 months, 45 months that after gold does a new high, silver does one. Being that long period was when the GFC, when that kind of really stagnated the launching pad for silver. And look, we're above that 10 period moving average. You could see in the GFC crisis, we just did barely below it. Yes. That 10 period moving average for that. And then after that, we were still in the bull market. For me, we're in a bull market since 2020 for silver. And until I close below that 10 period moving average convincingly, and I break through that arc, it's game on. So it's just a question of patience, daily noise, weekly noise. So now, as we saw, silver is having a little bit of trouble on the weekly chart. So until the weekly chart starts turning around, then silver's going to be continuing its sideways consolidation. And until, guys, that's the biggest thing with TA. I always hear, Patrick, but you're calling 28, 75. I've had look at my Twitter feed. I have targets way higher, but it starts with a confirmed breakout. So until we get a confirmed breakout, and even on the weekly chart above this line, you see those wicks? That was the silver squeeze. It had a wick. So someone on the daily chart, it's breaking out. But until you get at least a weekly close on that time frame, there's no defined breakout at all for silver. And at any moment, it's going to go back down, and then the buyer's going to come back in, creating either lower lows or hopefully higher lows. But this is the line, guys. It starts with a weekly close above 28.08, and you don't want it just to close just a little bit above. You want it to have like a convincing close.
Convincingly close above it, yeah.
Just
now we're looking at
just to show like gold, the convincing close it had in June of. Like, look at that! Look at that weekly close. No doubt about it. That was a breakout right here. One touch, 2, 3. There's no doubt. So there's a lot of ways you could have even look all the way back. So even if I go back to even older resistance, it still did some steps above it. Then for a few weeks, consolidated above, and that's all she wrote.
Which gives you more confidence because you're avoiding what they call basically a bull trap in that situation, which they happen in the shorter term charts first, effectively, don't they? Yeah. So if we get a weekly close and a significant weekly close, you've got more confidence in your position that you're not getting sucked into a bull trap. Would you agree with that?
I totally agree with that. And if you go to the monthly chart, guys, it takes 2 seconds to put a monthly chart. Here's the monthly defined breakout line for gold that it was. So here are the 2016 highs. Look at all these candles here. The small candles, these are daily closes that you could have got whipsawed. Then a huge drawdown. Of course, you're going to sell at the bottom because you're going to have to tell your wife that you lost all your money, right? So that's why like physical holders. Then you get trapped and that kills you, right?
Yeah.
And then this candle, look at this beautiful monthly close above all these breakout lines, even above this one here, I believe. Look at that. You've killed, and then you have a reverse symmetry move practically on the way up. So this is like the angle. Where's my angle chart?
Psychologically, when we see those breakouts like that, or even that monthly close, the weekly close, a lot of people feel at that stage they tend to sit in the sidelines because they feel, oh no, I've actually missed the move. But if you're going on for the longer trade, if you're getting in for the longer trade, this gives you, as we say, the confidence that your thinking, your analysis, and your positioning is correct.
Exactly. You can't find these big trends, guys. There's macro tidal waves. It's not manipulation. It's not this guy dumping. These are stuff influenced by the Fed fund rate, by inflation, like macro, like stuff, decisions that were taken months or years ago. There's cycles that are impacting the capital flows from U.S. equities into the precious metals. If you look at it on a daily time frame, well, at least if you want to do a day trader, but at least make sure you're above a bullish cross of a 1 year and 3 year moving average. At least look at that, please. Because if you try to short gold, at any moment it could turn back up, because that bullish trend could pick up. And so make sure the higher trend is in your favor, because every time gold's been above its 3 year moving average, even just look at that GFC crisis, Dave. It just came and refused to close below it.
Wow.
And look at that. I'll even put it on the look where like you could practically not see the gold. I'll put it on the line chart to move. Where's the GFC crisis? Gold. You could barely see it.
It's in there somewhere. Halfway between.
Look, all that's happening here, it's these type of patterns. Like there's nothing right now happening here on the quarterly chart for gold. Nothing. So I'll just put the 3 year moving average. Look at that, pure uptrend. So we're practically here, Dave, somewhere here in the cycle.
Wow.
That's how you remove noise. Because when I look at silver there today, something's up, right? So the market has to digest. There's a scare. The gold to silver ratio is going up. But at the end of the day, the macro wave is so much more than just here. There was some issues right here, and you see you had multi-years to recuperate. So that was a warning sign. But until you close below that 3 year moving average, for gold, you're still in an uptrend. And that's the hardest part, because people, they want to leverage $10,000 into $1 million. Their sell stops are super close. And when I talk about these long-term charts, they say, Patrick, get out of here. I don't have 10 years to wait.
And talking about long-term price targets, because I've been following some of your stuff now on social media recently, and you've got some interesting long-term price targets on silver with some triple-digit figures. Maybe you can explain to me how your analysis is arriving at those numbers.
Yeah, well, I have my greedy and my non-greedy targets.
I love it.
And the greedy ones are the ones based on log scale.
Okay.
But you got to understand with silver and the it's not like a ratio chart. It's denominated into a fiat currency, which is exponentially debased, or like it's like every year, I don't know, 11 or 12% more like money they bring in. And you see historically it's able to maintain logarithmic ascents, right? This is like on the log scale, you could see it visually, because if I put a chart on the linear and it's all squished down, that means there was a log advance somewhere and it just compressed that linear movement. So you gotta see silver as something that has a tendency to move logarithmically once it gets going, but on these big time scales. So let's say I just zoom in and I take, where's my measuring tool? But remember, guys, it's always one step at a time, right? And look at that. So this would be a peak to peak Uber 12. So like, see, so if you do a measure move of that huge multi-year 40-year base, and you add it on top, so that's a crazy target, like 640 here on the log scale. Just the recent cup that we're probably going to be forming, that's a 250% move. So that brings me to like around 150. That's, let's say, the angle of ascent keeps being maintained. And then you could have probably time to reach these targets, right? So let's say you keep bouncing off this uptrend, and eventually maybe you could reach that target in the late of the decade. So maybe triple digits, 150, blow off top, 28. And with other charts, we have gold to silver ratio, Dow to gold. We kind of estimate that the end of the bull market for silver and precious metals should be around that 27, 28, with a mid-cycle drawdown maybe in 2024, where it really like there's a crash or some type of black event. But you always have to base it back on previous history, because if I look at that ascent, it was able to, for decades on, look at that, it was able to maintain these type of moves, right? So it's always like based on previous history. Maybe I take the median line here, pivot line, then put it on top, and maybe that's going to be, we're going to go revolve up and down below, up and above through that. So maybe the target, another one, 20, 28, 29. So that's how, like, that's just one technique to get these really long-term provisions, guys. But emotionally, nobody's going to be able to survive that. Nobody. Because as soon as there's a 30, 40% drawdown, everybody's going to be out. And you've seen silver, how it behaves previously. It explodes, comes back down.
Patrick, you mentioned there, you talked about, that if we see a crash in 2024, I know that you have your market crash indicator as one of your methodologies. Maybe we might talk to that for a moment.
Yeah. Here's a non-greedy target, guys, for about like $80 or something there. That's the linear measure move. But okay. My market crash indicator, guys, I just posted it today. So every time I see there's the gold to silver ratio goes down. Okay, I had it right here. I'm loading again. When the gold to silver ratio spikes up, so we saw in the GFC crisis, it spiked up. We saw it in March Madness. The gold to silver ratio spiked up. Here is the March Madness. Gold to silver ratio is right down here. It spikes up. There's a blue line under. I could try to scoot that. It spikes up. Gold.
So the gold silver ratio is the blue line there. And what have we got on what's the black line then over that?
The black line is the US dollar.
Okay.
So when the US dollar starts climbing up, and then there was like an interruption right there where everybody thought maybe everything was back to normal. It spiked down. The VIX also spiked back down. The VIX is like practically the volatility or like correlates highly to the volume in the SPX. It had a little drawdown. But when all three decide to go crazy up together, VIX, gold silver ratio, so that means people going more in gold, even if gold price goes down, they're leaving silver, they're leaving all these type of riskier assets, they're going to gold. And the DXY shoots up. That is a liquidity crunch. And that's when the markets like they crash down, et cetera. So whenever I see that, especially when we start from super low VIX levels like we are today. So when I see the VIX right here going up 14%, I see silver going down. So the gold silver ratio is starting to go up. I'm looking at the US dollar. So as soon as the US dollar believes that, okay, something's up, the markets, this is, nobody's going to save the day, there's a real rush for those US dollars, then it could really get ugly really fast, But until I get those three like green lights, I kind of, okay, this could be one of these VIX spikes or these gold silver ratio spikes where it gets sold down and it's actually fuel for gold and silver to go up. So either we crash and we go parabolic on these three indicators and look, silver, everybody gets killed. But after that, the liquidity injections or monetary imbalances for the Fed to save the day or whatever narrative, gold and silver outperform on the way out.
And the volatility there is extremely, extremely low historically there at the moment. And we are, maybe you might pull up a chart of one of the stock indexes, the Dow. So I mean, we're at all-time highs effectively. Sold off a little bit the last just today, but I mean, effectively we're at those all-time highs. Are your charts and your analysis suggesting that this is something that can continue?
Well, this is the Russell, and this is its distance from its 12-month moving average. So the more your distance, the more you're like in a parabolic type of melt-up mode.
Yeah. And
once you start distancing yourself too much and you start crashing down like it's happening now, there's some damage that's created. Here, the Russell, if it would have been to continue melting up, I would have liked to see it bounce off that like its type of distance it's able to maintain before. Here's another trend line. So it could actually bounce from this line here. You don't want it to like lose all that momentum and get super close to its 1-year moving average. And then people like lose interest. And then there's a lot of damage that's created above. But it looks super precarious right here. So either we bounce off, it's back in the box. Either we bounce off this 1, 2, 3, 4, like 5, like super important trend line here of its momentum. If it doesn't bounce back up here, then this could be a game over there, and it's going to probably retrace some more. And that's what I would like it to see, because the more the Russell retraces, the more it scares the markets, and the more silver has to price in the eventual monetary imbalances, gold also. But they will get destroyed on the way down there for sure there. If it's like a GFC type liquidity rush, they'll get a...
Why do you prefer to look at the Russell?
Could look at the Russell. It's like the risk on. So usually it's like the one that falters first. But we could have fun with the NASDAQ, because everybody also is oh my God, look at that chart. So the NASDAQ has also had this type of box where it's distanced away from its moving average, but look at that here. It went out. It did go parabolic here. So right now it's starting to create some bearish divergence. So the price action keeps going up while it's not able to distance itself from the moving average as much.
Right. So we're seeing that means effectively we're seeing smaller increases.
Exactly. That's exactly
over a longer period of time.
Yeah. And you want the opposite, right? You want to be able, hey, this is so good. You want to create momentum, new buyers, more buyers. Like you want the buyers to outpace the sellers, like since 2018 or since those March lows. But now it's the opposite that's happening. You're essentially going to, it looks like almost like a rising wedge there.
Yeah. So it looks like you're running out of buyers.
Well, yeah. So either it's something crazy, it's a melt up, it's like it busted above and then it goes like parabolic, like we can't even imagine. Or the logical scenario is if you close below that inclining rail, you close below that 1 year moving average.
We got
you're probably going to need
a lot of potential on the downside.
Yeah, you need the Fed to save the day. I know I shouldn't say those things as a charter, but there's some downside. Like it comes to test that 3 year moving average like once in a while, right?
Yeah.
So guys, it's not if your grandma asks you how to buy NASDAQ stocks, it's probably time to
probably time to get in.
Look, this is it could go down all the way to 9,000. Why not? And that would be just a normal pullback, just a normal cyclical type of pullback back to 9,000, 10,000. Why not?
Yeah, that would create a fair bit of panic in the market if we see that.
Yeah, but that's going to be rocket fuel for silver and gold on the exit of that, and that should like drive us to those high numbers there in whatever I see there in the silver and gold chart.
Now, one thing that we've talked about a fair bit on this channel is obviously cryptocurrency, and crypto has been eating gold and silver's lunch a little bit, particularly the beginning of this year. We've then seen a fairly steep correction from 64,000 all the way down below 30,000. We're starting to creep back up again, probably fueled in no small part by rumors of Amazon dabbling in the crypto space or in the Bitcoin space. What's your take on where we're at in crypto and what is potentially going to happen next?
Well, okay. So what I do with gold or silver, TA, apply it anywhere. So this is like the big picture chart for Bitcoin, monthly chart, log scale, because this thing moves logarithmically, 1 year, 3 year. And my distance from the moving average. And a little while back there, I had put some lines here, I think up here. Look how far it's away. This is like my fear of missing out indicator.
Yeah.
And around 60,000, it got super stretched, like to levels that it's rarely closed above. And I think I did a tweet saying, look, a lot of people can get trapped between 65 and 55 because look, it's getting stretched. Even if you go up, let's say to 80,000 at this stage, you're still not buying at a low risk. Low risk is right here. It's off the 1 year moving average after long consolidation, close to that 1 year moving average. Right now, it's severely corrected to that 1 year moving average. So you haven't consolidated a long time, like a nice base here. So this one's tricky. You never want to see that close below that 1 year moving average. And ideally, you want a little bit of time there for this to reset, you know. If it goes back and closes back above its all-time highs on a monthly close basis above 58,000, this is off to the races again. It's just a pullback, and then once close above, it confirms that it's going time. But until it goes back above that 58,000, it's still in survival mode on that still inclining 1 year moving average. So as an entry, super tough. The real entry, guys, was hindsight's 2020, but after big base, the entry was probably back here in this region here when you were close to that 1 year moving average. But right now, it's still precarious how this is going to bounce.
And as from your chart there, anytime that it has closed below the 1 year moving average, it has actually gone on to test the 3 year moving average.
Yeah, it suffered. Yeah, you see it here, right? And it did both at the same time. There's just damage that happens when you, here's Ethereum, had a close below, so I had a few months below. And these moving averages, you have to adapt them according. The 1 year and 3 year moves, like psychologically, it moves well and with most of the instruments. But if ever you have a chart and you want to fine tune it, you could actually move that. You could actually move that moving average to see where it has the most touches.
Sure.
And then you get a more precise signal. So if I did this, so here I have the 6 month moving average. I'll remove that. And you see when that above pure bull market. And then this candle here was a time to get out. Mm-hmm. And after that, this one here, you close below, time to get out. You see, I had a hard time. You couldn't get back above for a while. And right now, look, you're below it. So you zoom out, still in the bull mode. You zoom in, the smaller time frames are telling you, look, you might need more time to iron this out there, this overhead supply.
Patrick, before we wrap up, maybe you might be able to just share with our audience where they can learn more about what it is that you do and what you offer.
Thank you. It's I have a website with Kevin Wadsworth, North Star Charts on Twitter. So northstarbadcharts.com. So all these charts, they're all there. There's a member section for those who want the more actionable charts. But on Twitter, I'm there on Twitter, all the big picture charts, like a lot of stuff is on Twitter. So my handle is badcharts1 on Twitter, guys.
It's northstarbadcharts.com. I'm going to put a link in the description of the show notes below here on this video. So if you click on that, you'll get to Patrick's site and you can learn more about that. But for now, Patrick, hopefully you'll come back and join us in a couple of months' time. We can touch base with you again and see what your analysis is suggesting at that stage. But for now, thank you very much for joining us on GoldCore TV.
Thank you very much. Bye.
Thanks for watching. And if you enjoyed this video, check out some of these other interviews that I've done with industry experts. Go watch them next. And remember, if you want to see more interviews with thought leaders and industry experts in financial markets, subscribe to GoldCore TV and hit the notification bell now. And if you want to learn more about how to buy, sell, and store physical precious metals, visit goldcore.com, your precious metals experts.